The decision really surprised the markets completely. There was an expectation of a rate cut by 27 out of 30 economists, and the end result was that there was no rate cut. But I think that was not the surprise. The biggest surprise came in form of the stance being changed by RBI. They changed the stance from accommodative to neutral, which actually marks the end of the rate cutting cycle. It's a very important decision by RBI, because in the last 3 months or so post demonetization, we have seen inflation coming down, and there were hopes of very large amount of rate cuts. We have seen the MCLRs coming down by 80-90 basis points, and going into today's policy, there were large expectations that RBI might deliver, the rate cut again. It has quite a lot of bearing on the financial markets in India, I would say, and especially the bond markets here, because the reasons which have been cited for changing the stance from accommodative to neutral is that they believe that the growth shock impact is temporary and that will come back. Secondly, they believe that the inflation which went down in the last 2 or 3 readings is primarily on account of fruits and vegetables, which is very transitory, and as remonetization takes place, you could see the inflation coming back. Putting 2 and 2 together, I would sum it up like this, that it has been a complete surprise to markets. In my view, the way things are, it is a complete stance change from RBI, what has been there for the last 2 years. In fact, I would say they've been cutting rates and making it more accommodative. The impact on bond markets have been quite severe. We have seen the largest sell-off after 2013 when the MSS was hiked by 300 basis points. The bond yields are up by 25 to 30 basis points. In fact, the way things are going to pan out, there could be still more pain going on. The bond markets might stabilize here where 10-year is around 675, but that's still 30-35 basis points from the lows what we saw. It is an important committee MPC meeting which happened because the kind of stance which has been changed, nobody expected it. I think I would say the repercussions are yet to be seen over a period of time. I don't expect any further rate cuts to happen, at least for the next 6 months. And lastly, I would just add, because of the change in stance, it is quite possible that if the liquidity which is excessive in the system, which as of now RBI has been trying to manage through the reverse repos and the MSS and the CMBs, they might suck out liquidity through the OMO operations also, if required, to adhere to the stance which they have taken, which is so they call it neutral. So I think these are the key takeaways. One is bond yields around 25 to 30 basis point higher and could stabilize at these levels. And second thing would be the liquidity. You could see some more liquidity suction measures from RBI.